Ladies and gentlemen, welcome to your very first session of Taxation 3A, Tax 3A for short. And I'm going to be facilitating this session. We are just giving people a teaser. It is not necessarily a lesson as such. It's just but a get together to know each other and to allow people to ask questions. And going forward, then we shall have proper lessons. Right, I'm Mr. P for short. And some of you, I see your names here. I might have virtually met you for financial reporting and analysis. Some I met on your Tax 2A, and some I met briefly for your IFA, which is Introduction to Financial Accounting. Just briefly, before I start into the session, maybe there's someone who may not have had an encounter with me before. Maybe before I get to give that brief, let me just get confirmation from any person, any participant. Please indicate to us whether you can see the visuals and hear my voice. Anyone to give us that signal? Can you hear me? Right.
I can hear you loud and clear.
Thank you so much, Besh. Appreciate. Thank you so much. Okay, thank you so much, ladies and gentlemen. Welcome once again. Mr. P Phida is my name, P for short, and I majored in taxation up to level 9, but I've had a brief stint in education. At some point, I was in education. I decided to diversify. I also hold a degree and honors in accounting sciences. I also am a member of some professional bodies. One professional body that makes me a bit relevant to your course is the South African Institute of Tax Practitioners Society. Right, so I'm a member there, actually, with a practicing number. Tax is very, very interesting. You don't just do it for the sake of passing a module like the one that you are doing, but it's a life skill. If you get someone who gives you the tricks to it, so to speak, you can even practice it in your day-to-day living. You may not need someone to do your tax returns, because if you can go into e-filing with the basic information that we acquire, particularly in Tax 2A, which is your personal tax or tax for individuals, you realize that it's easier to do it for yourself than to hire a tax practitioner who will come at a price. Now, in tonight's session, or in this module, ladies and gentlemen, you are actually looking at the other side. You remember when you were doing Tax 2A, it was individuals, and you were talking of human beings. But in this instance, you're talking of legal beings. So that's why we refer to this, your 3A, which is an offshoot of 2B. We refer to this as taxation of business enterprises. All right. So we will tell you how companies, how corporations, whether small or big, are supposed to calculate taxes and handle their tax affairs. Now, let's get to see what this session is going to be all about. But firstly, let's talk of the session objectives. At the end of this lesson, what are the things that we should achieve? All right, we will introduce the module to you. I do know that the majority of you have got the module guide. It looks like a forest, a jungle, and we need someone who will throw a compass and lead you to the desired result. And the desired result is at that point where you get above 90% in this module. So we shall introduce this module to you. We shall also identify the topics to be covered. In other words, what is your syllabus? What is your roadmap? What are the things that you need to do in order to say at the end when you are doing either the case study or the summative online assessment, what are the things that you should have learned that will get you good marks? We shall also list the different types of business enterprises. You will appreciate the nature of a business will have tax implications. In other words, the tax system is adaptable to the various types of businesses. So you are taxed in accordance to what type of business you do operate, and we shall avail that detail tonight. We shall also explain factors considered when choosing a form of business unit. You notice we've got a plethora of business units that range from the less complex to the most complex in the form of a company. You think of your sole traders, you think of your partnerships, your close corporations, you think of your companies in the mold of private, public, all those on the gamut of enterprises. And we need to ask ourselves, what could have motivated an individual to choose one type of business? So we shall also talk to that because it is found on your module unit number 1. We shall also explain the tax implication of each business type, like I've indicated already. This will have a bearing on the amount of tax or how you are taxed. When they designed the Income Tax Act, for example, they did take into consideration the various type of business units. So we need to look at how then when you choose a type, what factors should you consider? We shall also identify different tax tables applicable to different businesses. If you look at tax, it's not a one-size-fits-all. It is designed in such a manner that it accommodates the differences that exist between different business units. So by the same token, you'll find that the tax tables applicable are different. They range from that of a small enterprise to that of a big enterprise. We'll look at that. And we shall then allow people to ask a question and we'll give them answers. All right, so basically that's the lineup for tonight. It's not a lesson per se. I would like people to relax, to fire from all cylinders, asking questions as you please, because you would want to make an informed decision as to whether you need a tutor in tax or you can do without. So it is always imperative that you get to ask a lot of questions so that when you take that decision, you are taking it from an informed point of view. All right, now let's get to look at the taxation 3A overview. I do know that already some of you have already started with this, but my style is I always begin with end in mind. You need to take people at the beginning and show them where they're supposed to be at the end. You'll notice that this is the lineup, this is your syllabus, this is your curriculum, this is the overview for your course. Each one of these must be linked to a question which you guys are going to answer at the end. The first unit in your syllabus is the taxation of business enterprises. That's the intro there, where we are going to be looking at the various business enterprises we found in South Africa. And we interrogate them. And they usually like bringing a question with maybe 5 to 6 marks around business enterprises when it comes to your paper. And to me, there isn't much that has to do with tax there. So I always consider that as a giveaway, kind of like a low-hanging fruit, because it allows people to answer questions like they're answering a paper for business studies or commerce, for example. So it's that unit is a free for all. And then on unit 2, on your syllabus, we shall talk to specific deductions and allowances for businesses. Those of you who have done tax 2A, You'll remember we had general deductions and specific deductions for individuals. We also have specific deductions, which are allowable deductions for businesses. And one area which one does specialize in when they are learned and they've got the proficiency for tax is what we call tax planning, where you don't only go to a company to calculate how much tax they're supposed to pay, but you get to have this strategic outlook to say, we sit down and then we plan around what we should do to minimize the tax burden for that company. And one area that is easily manipulatable, which then allows you to do what is called tax avoidance. I want you guys to understand this, what is called tax avoidance and tax evasion. Tax evasion is illegal. Tax avoidance is permissible. You are using accounting ways to reduce the tax that a company is supposed to pay. So if you are adaptable, if you really know your specific deductions and allowances, you can play around with them so that they can reduce the amount of tax that you can pay at the end. And we shall be talking to some of these things as we proceed. And then we shall also look at expenditure and allowances for capital assets of a business. This is very, very important because as you buy an asset, you need to be saying to yourself, what type of a business are you? Are you a small to medium business? And if so, the government does have some ways of trying to cushion those small companies by exempting them from paying tax, by reducing the capital costs. So we shall talk about that. And we shall also look at the capital gains tax at some point, which is related to that so well. So one thing which you'll also learn is that when it comes to assets, as you use them, they lose value. And that is a deductible allowance. And in accounting, you would have referred to it as depreciation. But when it comes to tax, we will refer to that as an allowance, capital allowance. And we shall talk to that. And it is found in unit number 3. And then we shall then, after that, talk to capital gains taxes. This is a new animal when it comes to the South African tax system. It was introduced recently, around 2001, thereabout. And it is found in section 26, capital A. And it talks to a tax which is applicable when you dispose or when you sell an asset. You are selling a vehicle, you are selling a building, and you are selling it at a profit. That profit, which is called capital gains, is actually subjected to a tax. So we shall talk to that. It's interesting because you notice that when the profit is made, there's a reduction, an allowable deduction that is supposed to be made before you can calculate that tax. And then in unit number 5, we shall talk of partnerships. How are partnerships taxed? So we shall talk to that. And then we shall talk of taxation of companies and company distributions. You will appreciate that a company has got so many facets. Quite a number of transactions are conducted by companies over a year. And each one of them has a tax implication. Take, for example, when you buy inventory, you'll be subjected to a tax in the mold of VAT. When you decide to distribute profit as dividends to the shareholders, there will also be a tax on that, which is called dividend tax. And when profits accrue to the company at the end of the trading period, that profit is also subjected to tax, and it's referred to as income tax or corporate tax or company tax. So all those are the various forms of taxes that a company has to pay. Some of them are direct and some of them are withholding taxes. So we shall talk to unit number 6. Right, so ladies and gentlemen, we are not yet teaching you. We are simply taking what you already have in the form of a module guide and putting the pieces there so that we can then look at it as a structure and agree how we attack one part of it at a time. And the elephant in the room will fall for as long as we understand its parts. Then the last one is your turnover tax. Quite a very interesting tax, which is based on turnover, which is the amount of sales you make in a particular period of time or income you generate. And we shall also refer to that. It's great that they didn't decide to bring a provision. I don't see it there. Right, so those are the units for your syllabus, ladies and gentlemen. They're just about 7. They look very small but compacted. Text is very elaborate, so long, you need to cut corners somewhere so that you get to it at the end. Otherwise, we may not finish. But we'll go through this and ensure that we carry everyone through as we proceed and allow people to ask questions. And our style is you do a concept, you put a question, and that question must come strictly from a past paper. So we revise past papers through delivering principles. Now, once we agree that those are the topics that we must cover in this module, the next thing which we should understand are the wherewithals. In other words, what are the tools we need in order to achieve the goals we set ourselves around those units? Now, this module is referred to as Taxation 3A or business activities. It is half of the tax that a student has to do, because for you to say you have done a bit of tax, you must have talked about tax for individuals and then tax for business units. Though there's more to it, but at degree level, this is it. Remember, you guys, you are fighting for 15 credits. You need to get 15 credits from this module so that you can end up with the all accredited modules, credits that you require. The majority of degrees are around 360 thereabout. So you are accumulating. And when they say now you have finished your degree, it means that you have attained the right number of credits. And this year comes pegged at NQF level 7. And if you are thinking of looking for a tutor for whatever subject that you decide to do so, please first check the NQ level of your subject. And once you have got that, you then get to look at the tutor, ask them what is their highest attainment in terms of qualifications. You can't have someone with a degree teaching someone with a degree. So anyone who decides to teach a module at NQ level 7 must have NQ level 8, which is an honors, and must also maybe have NQ level 9, which is a master's, so that they can have a better view of the subject. Otherwise, someone with a degree will be learning with you as you go. So we hope you apply that as you look for tutors in each and every subject that you do. It can be someone who is either below your level or who has attained the level we are trying to attain. All right, so let's get to see the tools here, guys. Tools for taxation. I just wrote taxation 2A, supposed to be 3A there. Now, the tools that you need, first one is your module guide, because it's like the compass. The GPS is your module. Everyone must be having it here. It indicates and it also allows you, when you are in a formal lecture at university or this one where you supplement your studies, you must be looking at the module guide to see if the tutor or the facilitator is working tight with you or is going astray, because you don't need someone who's going to waste your time. So the module guide is a must. It's very, very important that you must have the module guide all the time closer to you so that you can see now he's talking about this, and he may have added some flesh, some depth because he has the experience, but I can still identify this within the module guide. So the module guide must always be your Bible when it comes to this module. And then what past exam papers, there is no way how you can learn any subject when you avoid questions, because the end of the whole process is assessment. And there's no better way to prepare for that than looking at past papers, which then gives you a gauge as to the level you are at. And it prepares you way in advance. So we shall use a lot of question papers as we move along for each and every concept we are going to be explaining. And then there's also a need to acquaint ourselves with text tables. They are there, they're in the public domain. You Google them up, you find them. But the tragedy with a lot of our students is the failure to apply them in the examination, because there are some skills which you need to be provided in order to extract the relevant info and apply it in answering questions. Together, allied to the text tables are the text guides. There are quite a number of text guides that you can even access on the internet, and they come in the mold of text pocket books. Quite a number of companies, especially those that are into text advisory, like your KPMG, your EY, and so on and so forth. All those companies, after the fiscal policies announced, like you heard a few weeks ago, the budget was being announced, and the companies will try to interpret that. At the end, they compact the info into user-friendly booklets, and we refer to that as text guides. They are very helpful to students studying a module like this because they apply the practical side of things. So that's tool number 3, the text tables and text guide. And then we shall also deal with or refer to the textbook, which is prescribed, and there is also the recommended. There are 2 of them, and I'll provide you with both of them. And I want people to understand that me and you and any other person, we have no copyrights to other people's properties. And it is very unethical to use someone's info, which is copyrighted, for pecuniary reasons. I'll share it on the basis that we will be doing this together, studying as a group, and I'm facilitating it, and I have access to that book. So I'm allowed to share it to my students. We are not going to photocopy it, transcribe it in any kind. We shall use it as a soft copy version. And I'm hoping we will respect that. The first book that you're going to use is your students' approach to income tax business activities, right? Your module guide indicates 2019. I may give you the 2023 one, or 2022 or 2021. I've got all the soft copies. So I will be sharing this if we get to a point where we feel we may need this as an additional module that I'll be delivering to the students through Mr. S group. All right, so you will expect to get this one. If you have already bought it, it's good. If you have not yet bought it, you may as well keep your money. We shall distribute this into this group. It comes together with one of my favorite South African books. I do have a confession to make around the book, that kind of like, I buy the new copy every year of Silk, because when I was at UP as a student doing text, two of our lecturers were actually the authors of that book. So I fell in love with that book, and since then I buy it every year. Even if I had the old copy, I keep buying the new one. So I'm addicted to it. It explains text in a very special way, the way I was taught text. Even judges at courts, when they make text cases, they make ruling, they sometimes refer to Silk. Silk is one of the authors. So normally say Silk and et al., meaning Silk and others. It's a big book, daunting, discouraging to students. Most people don't even read through it. but we shall just give it to you. Don't worry even if you don't have time to go through. We shall unpack it in a manner that is simplified so that you can pass. But otherwise, your course, your university wants you to have a student's approach to income tax business activities. They also want you guys to have SILK. SILK is recommended, but the prescribed one is the student approach. But I think I'll give them to you anyway. And I don't think there will be any need for you to read a lot around that. If you can have me and have the sessions coming until the end, you can pass without even opening those books anyway. And then we shall also talk to, you may also need the Income Tax Act. Right, ladies and gentlemen, I want to understand that the Income Tax Act is not a must. But those of you who may want to pursue careers in taxation, it's always good to familiarize yourself with these tools so that you begin to know the tools of your trade. You don't buy the Income Tax Act. It is available in the public domain. A lot of universities do upload it and are easily accessible by students. I don't know, your university is still coming up as an upcoming university. They don't have a dedicated Department of Taxation like the University of Pretoria, where you have got the Department of Taxation, which is a standalone, and they dedicated their time in research and general writing around taxation. So you would find income tax posted there for Income Act posted there for students. But those of you who want to pursue or have an interest in tax, you may also need to augment your studies with an Income Tax Act. It's accessible on the internet, it's free. All right, and then the last thing that you will need to have to pass this module is our live sessions, like the one that I'm currently delivering. If you make it a habit to attend and interact with the groups, answer questions together, you ask me a lot of questions, and give yourself a poetic license to ask as many questions as you would like, then you're going to pass. And then we'll also give what are called pre-recorded lecture videos and PowerPoint slides, which we are going to upload on Google Drive, accessible post our lessons for those who may have, for various reasons, missed the sessions. So ladies and gentlemen, these are the tools for the Taxation 2A. I know already you got your module guide, and here and there you have had an exposure to a text table. Maybe some were too quick to buy. They already have got these textbooks. So we will be augmenting on those things as we proceed. But supplementary sources, this is just to add on what I just gave there. You may also need to visit this Wikipedia taxation in South Africa. It is loaded with a lot of information around tax. Let's say, for example, you meet something and you've forgotten a fact relating to tax. If you go there, search quickly, it will provide you with the relevant information. And SCGT has done a sterling job. They are putting a lot of information relating to tax in South Africa. So you may visit the South African Institute of Tax website. They are forcing some of us to produce some documents so that they can put up there. So please, you are free to do that, especially those of you who want to pursue a career in taxation. You can also visit the Mother of Tax, which is the SARS website. They get quite a lot of stuff that they posted. What you see on the website for SARS is beyond dispute, because is the final. That if there is an argument around the tax academically, the final arbiter will be SARS, because they are the custodian of the tax system in South Africa. Though, of course, if you were to talk of a legal dispute around tax, they go beyond SARS, because they can't be the referee at the same time. We've got our court systems, starting off the tax court and then going on to the constitutional court. But otherwise, the information that you get from this SARS website, as of for now, at your level, it is very adequate to address your academic questions. Then we shall also have to encourage people to visit the tax faculty. The tax faculty comes up like an academy for taxation. They are trying to train tax practitioners. Actually, they even offer bursaries. They've got courses that are offered at diploma level, and they've got practical approach. And when you get to visit them, if you're already trying to practice tax, they can give you the relevant amount of experience which you require for your trade. Some of you, as you get registered, you realize that your professional bodies will need you to have certain points for a particular year, and that is done through writing courses or reading through. And the tax faculty is one such institution that provides such information. Then you can also read journals, those of you want to go into depth. But I know the majority of you just want to say, look, I want to pass this thing and fold the module and forget about it. But we want to steer people beyond the examination and make them realize that this is not just but an academic issue. This is a life skill. If you know taxation, I tell you, believe you me, you enjoy in your life. You are more than a small company because you can even survive without even going to work. All right. So those are the tools you will use. And then maybe quickly, ladies and gentlemen, from get-go, I want people to familiarize themselves with these acronyms. Remember, I said today's lesson is not a lesson per se, it's just getting to know what you guys will be studying in this module and having a text overview and maybe allowing people to have a sense of the type of tutor you are trying to dipstick and see if it's really worth our time. All right. So one first term that you always want to encourage people to familiarize themselves, because it will be replete throughout all your books and even your literature around this module, is SARS, South African Receiver of Revenue. Right, that's your SARS there. Some people will say South African Revenue Services. I prefer South African Receiver of Revenue. Right. If you are British, you will refer to that as the Inland Revenue. All right, so that's your SARS there. Then we've got SBC. It may sound a waste of time as we pitch these things, but imagine at the end you get a question and you are told in that question, this is a small business corporation, and then you are asked to calculate tax liability. The moment they give you that this is a small business corporation, you must know that the way you will handle a small business corporation is slightly different from how you will handle a big corporate. The tax law, the tax act, the income tax, and tax administration are actually more lenient when it comes to small business corporations. The idea is they're trying to promote the creation of small businesses. So when it comes to these small businesses, the taxation regime is very, very relaxed. You find them getting some allowances that go as far as 100%. And they are also taxed on a sliding scale. So it actually gives them that comfort, unlike big companies that are charged at a flat rate. So these ones, they are treated like with kid gloves, so to speak. Then we do also have, I think that's the reputation there, right? Then we've got your capital gain tax. We keep on referring to that as SCGT. It's one area a lot of people shy away from. Even some lecturers don't even go that area because it comes with some intricacies. But once you get used to that, it's very, very interesting. And I'm glad at your level, they never pitch it to the level that gives you a lot to be scared of. It's very basic at your level, and you will enjoy it. And all you know is that it was introduced very recently, 2001, which means in the past, you just sell an asset and you pocket the profit. No one will give it a hoot. But after that, I think when they try to expand their tax base, they realize that, well, look, these transactions can also bring us quite a lot of money. So they're now taxing that as well. All right. Maybe just before I do proceed, I've talked a lot. Maybe I should ask people to, if there's any question, maybe someone is hanging there and says, he has mentioned this, but I feel I need some clarity. All right. Anyone with a question, ladies and gentlemen, around the intro so far that we have heard? Anyone with a question? Maybe a contribution, anything? And if people are good, we can also acknowledge that, well, look, we are good. We can then proceed. Hello, good people. Any question? You see, at this point, I normally pick up people with names of phones, because usually when you attend a virtual lesson, I've had to facilitate quite a number of virtual lessons and in some cases seminars. People who don't want to talk will always bring. I don't really mean it in a bad sense. They will always bring their names in the form of a phone or even a laptop. So I always pick on the laptop to say, okay, Lenovo there can give us an answer, and if there's iPhone, I'll call up iPhone. Right. So I'm seeing names of phones here. So I'll go for those individuals first before I go to people I know, like Mohammed. Mohammed, I know him. I think I saw Phida there, Snetemba, Terrin, I think, Thelma, Tieho. Yes, I remember Tieho. All right. Some people I've tweeted before here. Didn't you? I suspect as well. All right. All right. Galaxy 32, A32. Any questions from Galaxy A32? Hi,
Hello,
Galaxy.
Mr. P. Hello, Mr. P.
You really sound like a Galaxy. Yes, shoot.
No, it's Yolanda.
Oh, Yolanda. Oh, yes. Come on, Yolanda.
Yes.
Oh, you decided to hide this time. Okay. Welcome, welcome. Now I remember you. I remember you. Thank you so much. Okay. I was just teasing you. Okay. Right. Yes. I see in the charts there, Mohammed is all good. Mpo, all clear, good. Yolanda, I'm good. Having load shedding car 8 over 2. And then Zara, all good. Thank you so much. Appreciate that, guys. This load shedding is something that we'll have to live with. You know, it seems we may have to have minister for canceling us for load shedding. I think the Minister of Electricity won't save. All right, so a bit of taxation and introduction. This is just but a carryover from taxation 2A, just to give people that feel of what we mean by taxation. Now, a tax is a levy that is charged by the government on tax payers. And now, why did I decide to bring this definition? It gives you an understanding of why we need those two modules, tax on individuals and tax on companies. So it says it is what the government levies on taxpayers. And when we talk taxpayers, they are twofold. We do have what are called citizens, and these are individuals like me and you. They are human beings. And then we've got what are called corporate entities or legal entities. These are beings that are formed by law. The law has to come together and produce a being that is referred to as a legal being. And as much as human beings come together and produce a baby, and that baby is called a human being, when they attain the emancipated age of 18, they are supposed to pay tax. And the tax that they pay is called individual tax. But when you found you form a company and you're a founder, that company, once it attains a certain status, it becomes a legal being. And that too is also taxable in terms of the Income Tax Act. All right. The reason is to finance government's expenditure. We all know that. Some people say nowadays it's used to finance corruption. we do quite have a lot of an array uh, of tax types. We do have your capital gains tax. You saw your CGT, which you're going to learn. We also have what your value added tax. This is very interesting, and I wish they brought a lot of it for this module, because believe you me, you when you talk companies, you talk VAT, but they loaded a lot of this on your tax 2B, and they don't have it this side. Pay as you earn, which is what you did in your individual tax. So all those are the various forms of tax. But for you to apply a tax, there should be a basis for taxation. In other words, what are we holding on as the government to tax people? So there are two bases generally in the world all over. And these two bases are what you call the resident bases. That's why you need to apply the residence test, which you let it to tax 2A. And if someone qualifies as a resident, then that person, it is deemed is liable for tax for various reasons. The moral of it, they're saying you benefit from services in a country like policing, safety, and stuff like that. So therefore, you are compelled to pay tax. Beyond that, we also have what is called source bases. You may not be a resident, but you derived your income from our boundaries, from South Africa, then you are supposed to be paying tax. So there are two bases for tax, which is your resident basis and your source basis. Believe you me, you can write several books around this topic, and I've seen quite a lot of projects, research projects around them. They're not exhaustive, but it's very, very important that you get to understand that tax is charged upon the basis of residence as well as the source basis. In other words, are you a resident? If the answer is yes, then you're supposed to be taxed. And then where did you get the income? If you got it from South Africa, then you're supposed to be taxed. So if you're a non-resident, you're not going to be taxed as long as the tax you got is not derived from the income. So the income you got is not derived from South Africa. You may be a non-resident and still get taxed because the income you got comes from South Africa. You may have got the income elsewhere, but you are not a non-resident, so you won't be taxed. So those are some of the reasons why we may need to understand that. All right, I can see Toli, the network is giving a bit of trouble. I hope it's going to stabilize on your side. All right. Now, once you have got that, let's get a bit of your module unit number 1. In module number 1, unit number 1, they want us to introduce you to the various types of enterprises. These are the different business types or business forms or business units. And generally, these are the business units we need to familiarize ourselves with as we start this module. The first one is what we refer to as your sole proprietorship. The second one is your partnership. The third one is your company. And you've got trust. So these are the various types of business units. In this module, what are they trying to do? They are trying to explain to you how a sole proprietor will be taxed. As you sit there and you decide to get into business, you will get to ask yourself, should I be in this type of a business? What will be my tax liability? So that's basically what this module tries to say. And it also says to you, if you decide to get into a partnership with an objective of profit or with a view of profit, what will be the tax implications? So that's what the module tries to say there. And then it will also talk to a company. There are quite a number of companies. It's not a blanket type of a thing. And we are going to unpack each type of a company and say, how is this one taxed? And which one is having a more advantage when it comes to tax? And the issue of trust. At some point, trust used to be used as a tax haven, where people will hide behind this veil of being a trust, in the hope that they will stop SARS from knocking to their door and getting taxed. But the lawyers moved very quickly. You will realize that in as much as some of them, they're still attractive, but the majority of trusts are taxed at 45% for as long as you will be transferring goods or receiving assets from one to another. So there are quite a lot of laws around trusts, and you need someone who is very knowledgeable, who will craft the right one that will give you some kind of tax relief. Otherwise, if you plunge headlong into a trust, you will even regret the day you change your company into a trust, because SARS won't have that mess. All right. And we need to understand from this point that the choice of business unit that an entrepreneur makes has tax implications. So the majority of people look at profit and they say this type of business is more profitable, and they go into it. But you need to look wider, get to consider other forces like your tax, because the environment you operate in as a business entity is regulated. One of the laws that will impact on you is the Income Tax Act and the Administration Tax Act. Once you say, I'll actually abide with that, then you must ask yourself, how much will be the cost of tax from my business? A lot of businesses have gone down under, ladies and gentlemen, not because people were lazy, they're not business people. The tragedy about most business people is failure to understand tax. You have seen it with famous players, particularly in Spain, where you get to hear that this player is being fined because they evaded tax. You hear with our politicians, the majority of them always are in the news having problem with SARS because of tax issues. And a lot of companies as well had to go down under because they didn't read the tax regimes well. And when tax is not paid and SARS comes for you, that will quickly bring you down. Whether you're a politician, the quickest way to bring down a politician is to go to their tax affairs. Everywhere in the world, once you get to look at their tax affairs, you always find something that is not clear. And when it's unethical, then it brings them down. I remember the then president of the state of America, he used to refuse to have the federal government looking at his tax affairs. Why? Because you know him. He was not very clean, despite him being very vocal. And back home here, we hear quite a lot of things about taxes, monies that are not supposed to be somewhere, and they're not declared. You see, it's all about tax. One opposition leader at some point had to have the family trust being abandoned, and the farm being sold, and the house that was being constructed around Sentin being sold. Why? Because the tax issues are not clean. So it is very, very important. I went that long to give all those examples because I want people to understand the import of having to choose a particular type of business and how it will impact on the tax you pay. And the tax planning begins here, where you say to yourself, if I were to advise this individual, I must look at the end and say, when they've accrued profit, how are they supposed to honor their tax dues? So it all depends with the type of business that one chooses. Now, the legal form of the business is very, very important, ladies and gentlemen. Now, the legal form of the business is a direct bearing on the way the business is taxed. By legal form, we are saying, what is your legal status as a company? Are we having that, we call it in Latin, in law, the locus standi. Are you viewed as a person in law through the eyes of the law? Are you seen as a person or not? As we study here, we'll learn about different types of business. Some of them have got legal status and some have no legal standing. A company with legal status is taxed separately from its owner, whereas entities with no legal status are seen as the owner. So they're not taxed separately. So the legal form of a business is very, very crucial. Now, the tax calculation can be divided into two. That is, namely, is the tax charge on the person or on the business. As we start here, you will notice that businesses such as sole traders and partnerships, the profit is taxed on the hand of the owner. When profit is made, it is considered to be the owner's income. So the owner is the one who is supposed to make tax returns. But when we come to other forms of businesses, such as companies, your close corporation and trusts, you'll appreciate that they've got legal status. They can stand on its own. They can enter contracts. They can hire people. They can fire people. They can sue. They can be sued. And they can enforce contracts. And because of that, they are perceived to be different from their owners. So the owner's affairs will be taxed differently from that of his company. All this stems from the understanding of their legal status. And I know to some they are sitting, this concept of legal status may be a bit hazy. I'm just giving you a teaser, the tip of the iceberg. We're not going to go, we're going to go into the depth of it as we get into the proper lessons. All right. Now, let's get to talk a bit of the status of close corporation. I alluded to close corporation and companies and trusts having a legal status, which makes them to be taxed separately. But we need to go a bit closer home and address the issue of close corporations. Ladies and gentlemen, we appreciate that there was a change in 2008 of the Companies Act, which looked at the status of close corporations. You will appreciate that in South Africa, you cannot form a close corporation right now. If you decide to say, I'm standing up, I want to go and form a new business, you can no longer call it a closed corporations. I remember when I used to grow up, these fly-by-night people who used to say they are selling table companies, they'll go and register a company, Cypro, and then when you want to start your own company, they sell that to you. They used to call it CK, what, then they sell it to you. And most of them, they register in closed corporations. And I think it's from that wanton abuse from the closed corporation status that the government found it important that it has to be scrapped. So no new closed corporations can be formed. And you can't change a partnership into a closed corporation. You can't change a company now into a closed corporation. But what we can do is, if there is already an existing closed corporation, which was in existence before the change of the law, then it can continue to exist. So that law did not affect the perpetuity of the closed corporation. They are still continuing to exist. But no new closed corporations can be formed. I liked that because when I was still doing accounting at a tender age, I used to hate accounting around closed corporations when we have to do the members account or members contribution account. It was a forest that was very confused. And I'm glad they scratched that one. Now, according to the Companies Act of 71 of 2008, the new registration of closed corporations and the conversion of companies to closed corporations are disallowed. I think I've read allowed to that. Existing closed corporations will still be maintained, so you can maintain them. Or you want to upgrade from a closed corporation to a private limited company or to a public limited company, you're allowed to do so. But you can't assume the closed corporation status of a new one. Now, these are some of the factors. I just took them from the module guide. I don't even know why they are made about them, because It's not like they're talking business studies or business management or even just general commerce. I wanted them to go headlong into tax, but they've got their own way of being main courser. We're not going to strip them of their flavor. So they are saying we need to teach you the factors one has to consider when they're choosing a business type. And these are some of the factors. The issue of limited liability. I'm not going to go over it word for word. I just want to go to paraphrase there because this is out there for everyone to read in simple. Right. Okay. There's someone with a question. I'll pause a bit and take that one. Thank you so much there, Yolanda. We'll join next week, load shedding. Sorry to hear that. This load shedding is really a problem. All right. So it's limited liability. Now, this limited liability is a very, very important concept. Those of you who do commercial law or business law, I think you enjoy that particular part where you get to understand that the affairs of the owner and that of the business are different. If the business becomes bankrupt, the creditors cannot sequestrate the personal assets of the owners and use them to pay off the debt of the business. So we call that limited liability. This was one of the best corporate creations in the world. If there was innovation that took people to the moon, this here is innovation that took people to capitalism, because it removed the fear of losing everything should the business not do right. And it allowed people to take the risk of investing, knowing that their risk is limited to what they've invested. If you invest in a limited liability company, all it means is when the company goes down under, you are only bound to lose your investment. They won't come for your personal assets like your house, like your car. So the word limited liability means the liability of the business is limited to what you have invested in that business. If you invested 20,000 and the business goes bust, the only thing you are set to lose is that 20,000. No one will come home to take your car, to take your house, or even take your wife, because they've got limited liability. All right. So that's a very, very important concept there. But if you were to go deeper and you guys, if you study, you'll get to appreciate that this limited liability is actually something which is a bit artificial, because if you take these individuals to law and their company has actually gone down, let's say, for example, a bank, and then you take them to the law, the court may have to look at the circumstances that led to that company becoming broke. If it can have reasonable facts to indicate that it was their selfishness or their inefficiency, then the company can pierce this corporate veil of limited liability to expose these crooks that were hiding behind the limited liability concept. So they may still get into trouble, but on very rare occasions, exceptional cases, so to speak. But for now, all I want you guys to understand is that this limited liability provides the investors with that protection. And that is why companies grow fast, because people know they are a bit safe. And by so doing, companies are able to raise large sums of capital because people are prepared to invest. If this limited liability was not there, people will be scared to say, if I get to put myself there, should things go wrong, someone will come home and even take what has nothing to do with the business. So limited liability, it removes that risk of business failure. So it's a very, very important concept there. There's also the issue of legal standing. I think I've talked about the local standby to say if you've got a legal standing, your tax affairs will be handled separately compared to if you don't have one. Then legal requirements. Ladies and gentlemen, when you form different types of businesses, the scale of the requirements you are supposed to meet differs. For a sole trader, it's like walking in the park. There are very basic things required that don't even stress the person who is the founder. But as you proceed upwards, like for example, beyond a sole trader, when you get to be a partnership, the law may want you to ensure that there is a partnership agreement or partnership deed. It doesn't matter whether it is a tacit agreement or it is a verbal agreement or it's a written down preferable agreement, but that's a requirement on partnerships there. When you get to your close corporation, it used to be the CK document. But now when we get to companies, the legal requirements are a bit more stringent. You are required to file certain documents with the registrar of companies, SAPRO there. They may want you to file the memorandum of incorporation, and they'll look at the memorandum of incorporation. If they are satisfied, they will respond by giving what is referred to as the certificate of incorporation. And if you are a private company, you can start trading. Ladies and gentlemen, strictly private companies can start trading once a certificate of incorporation is issued. But if you want to be a public limited company, the law will still require you to issue what is known as a prospectus. And then once it meets the requirements of the Companies Act, then on top of the certificate of incorporation, you will also get a certificate to trade. All right. So that's why we say legal requirements differ. Formal requirements means that you spend more money trying to form a business. But if they are less, it's a walk into the park, like I indicated. Companies may also have to after formation, they may also need to appoint an auditor. And they're also required to have a board of directors that is structured in the way that there is a check and balances. That's why you find in a company you've got non-executive CEOs and executive CEOs. And each one of them is meant to balance the other. So those are some of the legal requirements. All right. I don't know why they brought this there. I think it's common knowledge. Then there's the risk of failure, right? You will appreciate that the smaller the business is, the lesser is the risk. The more the business is, the greater is the risk. The more you invest, then you're set to lose more. All right. There's also protection of beneficiaries. Does failure of the business affect the assets of the children or heirs? I think it still goes back to limited liability, where you form a business, things go wrong, and then they sequestrate even the assets of your children. Right, provision of retirement, I think is self-explanatory there, right? Okay, this year we are doing currently, it's all found in your module guide, unit number 1. Just try to use it as a teaser, guys. Get it out of our way and get to talk text. I don't even know why they brought this one, but the good part of it, Menkosa being Menkosa, they even bring questions about these things. They don't really sound text to me, but they want you guys to know them. And who are we to say, let's not talk about them, because these are free marks anyway. Right? There's also taxation liability. You will appreciate some business units will make you tax liable and some not. All right. And then other taxes beyond your income tax that you need to pay. And then issue of flexibility, right? It goes also with continuity. Flexibility means the ability to change from one form to another. All right. It also means that when you have invested there, are you able to take your money and as quickly as you want? Because you don't want your money to be tied up in a place where you can't access it. If you look at a company, it is a heartthrob of capitalism. I love it. I love the people who designed companies because it's a self-contained process. It's an organic process, animal. If you look at a company, it breathes. Companies are designed in such a way that when you invest there in the form of shares, you become a shareholder. Should you then decide to get back your money, a company will provide you a platform on which you sell those shares. And we refer to that as the stock exchange. For example, your JSE, where sellers and buyers of shares do meet, and they fix the price depending on demand, and you can easily sell your shares and get back your cash. Meanwhile, the company won't even be affected. The only thing that changes is the ownership of the shares. So that's the flexibility we want. But when you talk of a sole trader or a partnership, for example, it's a bit difficult because when you decide not to be part of it anymore, it dies with you because you are the company. There's no separate entity between you and that entity. All right, but companies, some people even die, even the workers in a company won't even know that there's a shareholder that has died. And some shareholders won't even know that one of our fellow shareholders has died. So that's how complex companies are. But the issue of administration, you understand, the smaller you are, the less administrative headaches. But if it is a big company, there are quite a lot of things that are required, like your meetings, the minutes, and they should also maybe have annual meetings. And usually, a lot of people think that if you become a CA, you become with a master's in whatever, you can be an administrator in a company. Yes, you can be one in default, but in essence, there are certain requirements for those people to be effective. In the past, we used to have a body which is called the CIS, Chartered Institute of Secretaries and Administrators. That body used to produce admin clerks for or secretaries for running companies. And a secretary at that level is not what you think of in the form of a clerk, the one you we are used to. A secretary in this sense is a person with legal expertise to run a company. So you may Google up CIS, Chartered Institute of Secretaries and Administrators. It has got that secretary badge as a logo. I think some of you have seen it before. Those are individuals who are the heartthrob of companies. The issue of cost, I think, is self-explanatory. We won't waste our time on that. So ladies and gentlemen, if you open your module guide, you'll find there's a table like this. I decided not to populate it because I thought it's easy, but I'll pitch it up here to encourage people to go back into that module guide as part of the build up to our next lesson and get to know these various types of businesses, partnerships and sole traders. How do they differ when it comes to legal personality? How do they differ when it comes to interest income? I want to mention that when it comes to interest income, there's section 10A, which talks about exemptions of income, tax interest income. Partnerships are exempted as well as sole traders. Hold on that because we are now talking tax. I want you to read legal personalities of each. And when you get to interest income, look for the exemption of interest. At the start, it won't make sense. When we draw up the calculations of tax, it will make sense. Profit for the year, loss for the year, taxable income, small business corporation, micro business. Look at all these facets and get to compare and contrast these two business units. I'm not going to go there, guys. I'll just throw it to you and hope when you come on the rebound, it will be loaded. And the second part is the second table still coming from your module guide. And this speaks to a close cooperation in a company. I want you guys to look at the legal personality of these, and you'll appreciate they both have got that legal personality. And I want you to look at how do they handle the profit. You find one adds profit to the members and the other one does not give to the members. Distribution of profits, that too you should look at that. Your interest income, strictly, it does not qualify for both. Tax rate, your module guide, ladies and gentlemen, maybe that's where you need me because your module, or that's how cruel tax is. Tax will talk to you about buying a book for 2019, buying a textbook for 2021 or 2022. But when the question comes for the examination, they may come with a rider or a question or a part that says to you, calculate tax for the 2024 year of assessment. Meanwhile, the only thing that you have made in your study is the 2021 tax tables or the calculation that appear on your module guide, which was written in 2019. How then do you make them relevant to the questions. So you'll appreciate that it is very important that as we read through, we need to synthesize the information because text is very fashionable. It does change quite a lot. If you go to Truett's Ladies, for example, you see a good costume and you tell yourself, I'm gonna go there and buy it next week. When you go online to check for it, it's gone. You'll wait and wait until amen, because they want to reproduce that thing. Limited edition. So text is also kind of like limited edition because it keeps on changing. As soon as you hear the new fiscal policy being announced, which is the budget, you will appreciate it will bring some changes. If you look at your textbook, it says the tax rate for closed corporation is 20%, 28% flat rate, and a 20% charge on the profits distributed to members. It says the same for companies, to say their companies are charged a 28% flat rate and 20% on dividends. But I want you guys to realize that this may be true with regards to the year the module was written. If you listen to the budget, you will appreciate that from the end of this month, the tax rate for companies is going to be moving from 28% to 27%. So that's the first thing that you need to highlight, because it will impact how you answer your questions. So for now, we'll make do with 28%, but it has since been changed. And I've seen your question papers, they always want you to use the relevant info. All right. So please go and read those two tables, bring back questions if there are any, and we are going to answer those questions. All right, ladies and gentlemen, you will also have to look at this part of the slide there. All right, and I just decided to look as a start. Let me just pitch some text tables which we'll be using, and you'll notice that on or after 31 March 2023, for companies, you will appreciate that we are moving into 27%. I just started to highlight that from get-go so that we didn't get confused, because in the majority of cases, the books still talk of 28% because since time immemorial, the rate was left at 28%. And the current government thinks to promote investment, they need to relax on taxes. That 1%, they think it will bring us more direct investment. Now, this is for small businesses. That is why you need to, at some point, as we teach you, to understand that if you are talking of a big company, the rate will be 27%. But when a company then qualifies to be a small business corporation, then the tax application changes. It will be on a sliding scale like this one. We will explain how this becomes an advantage to these small business corporations. All right, this year is for individuals. I think you remember we did talk about this one. Those of you who were with me in text 2A. Why would I want to ask to refer a bit? You'll find that when it comes to sole traders and partnerships, their tax is in the same manner like individuals. So we still have to use the tax rates for individuals there. All right. So ladies and gentlemen, basically, this is what I wanted us to look at. But what I also want you guys to understand that the tax year of assessment, these are small things that I want us to get to know from get-go before we get into the real thing. The tax year runs from 1 March. So I could have said to you guys, Happy New Year, because you are just but 13 days old in the new year for tax. The tax year begins on 1 March and it ends on the 28th or 29th of the following year. So you are likely to answer questions that will require you to assess people's tax affairs from March 2023 to February 2024. Be on the lookout for the questions. They will be like that in your examinations. All right. It is named by the year in which it ends. I think that's very, very important. If we say calculate the tax for the year 2023, we are looking at the affairs which started from 1 March 2022 to February 2023. If we say calculate for 2024, you will be looking at 1 March 2023 to February 2024. So we always name it on the year it ends, because it strides over 2 years, begins on March of the other year, it ends on February of next year. So we always mention the last year. The 2024 tax year runs from 1 March 2023 to 29 February 2024. This is the tax year that we have just entered. I think that's very, very important. These are the small things that we need to iron out before we even study this module, because a lot of you, when you are asked to answer a question, you don't even know which text table do I touch, because they can bring text tables for 3 years as an addendum to the question paper. And only to look at that and you ask yourself, do I take 2024? Do I take 2023? Do I take 2022? The answer lies in this thing here, which is the introduction. So please get to know this as we get to start. And remember, guys, this is a 3rd year module. Don't expect it to be treat you with soft gloves. You have now come of age in terms of your studies, and you'll notice here and there we'll be throwing in those bombshells to ensure that you get the right terminology. Won't shy away from using the right terms as we proceed. Okay, so we shall give you these steps as we proceed. Remember, we said this is a teaser, and then after this we shall get to the framework of text. I don't want to get to that for today, because like I indicated, it is just but a teaser. A teaser should not give too much detail. It must give just enough to allow people to make a decision. And then after that, we get into the real stuff. So this is just but an appetizer, ladies and gentlemen. We wanted to end after just 1 hour, but I think we've ran up to 20 minutes after. Let's give people a chance to ask about 2 or 3 questions, and then we call it a night. Oh yeah, if a person says current year, right? If a person says current year, they're talking of 1 March 2023 to Feb 2024. That's the current year period. All right. And for most of our question, they will give you the last year. If they say calculate the tax affairs for year of assessment 2023, they want you to pick things from 1 March 2022 up to February 2023. All right. If they say calculate for 2019, you are picking from 1 March 2018 to February 2019. Okay. All right. Any other questions, guys? And then we'll call it a night. And in our next session, we are going straight into the issues. We shall do and principles, and then a question that comes from a past paper. That's my style. I go straight to question papers. We don't want to waste time on things that don't come in the exams. All right. Now, ladies and gentlemen, 2 more questions, and then we close this question, this thing. Anyone with a question? Indokuhle Mbuli, Mpho, Phindile, Sendis Nethemba, Terin, Thabiso Moeti, Tiego, Xoli, Zara, Stephen. Right. Anyone with the questions, ladies and gentlemen, feel free. You can put it in the chat. You can unmute yourself and ask. I thought someone was going to ask me about the case study, because I saw something like case study there, and it's very interesting. Thought someone will take advantage of the interest, ask me a question around that, because oh yes, there's a question there. Thank you. The related to lecture session. Thank you so much, Peterson. Appreciate. Okay. All right. Let's see there. Cindy, thank you so much. Appreciate that. Okay. right? If there are no further questions, ladies and gentlemen, let's make it a date. Mr. S is going to communicate to you as to the next sessions, and then he will give you the timetable, and we hit the ground running. All right. Oh yeah, there is a question there. So the new tax rate is 31 March. How much will that affect the tax calculation for the year 2024? We calculated in March of 28, then the rest of the year at 27%. All right. So what they will do. Thank you so much for that beautiful question. For tax purposes, there won't be an effect because the year starts on 1 March, going to the to next Feb. All right, so it's just the phrasing, but in essence, it will be applicable in retrospective to be applied from 1 March. But then if you were to do accounting, there's what is called International Accounting Standard 12 that talks to deferred tax. There will be an aspect of deferred tax, a bit of tax that should have been included would have been deferred. And there's an accounting way of handling that. But otherwise, for tax and this module, that will not have an effect at all there. Thank you so much for that beautiful question. All right. All right, thank you so much, ladies and gentlemen. I can't wait to have a lesson proper. Some of the questions that I already see here, they are mind-blowing, so beautiful questions. And I'm only effective when people ask me questions. At times I just take things for granted, but when you ask me questions, you prompt me to deliver things in the manner you would enjoy. All right. Okay, thank you so much, Toli there. All right, ladies and gentlemen, allow me to end the session, and let's meet in our next one, the proper lesson. All right. Thank you, everyone. Good night. Enjoy. Bye-bye.